This is presented by HPS Trade, Japanese freight forwarder in Thailand. Hello, it's Iino. This time, I would like to explain about how to read insurance policy. Risks lurk in many places in trade transactions. Therefore, it is necessary to have a good understanding of cargo marine insurance, which is important for hedging risks in transportation. So, let's get started. First, what is cargo marine insurance? Cargo marine insurance is an insurance policy that compensates for damage to cargo caused by unforeseen circumstances in international transportation. It covers not only the damage to the cargo itself, but also the profit, 10% of the CIF amount, that the importer would have earned from the subsequent sale of the cargo. The policyholder is either the exporter or the importer, depending on the terms of the Incoterms. Once insured, the insurance company will send an insurance policy as a certificate. If there is any discrepancy between the insurance policy and other shipping documents, such as invoice, packing list, and BL, the insurance may be denied in case of emergency. The following is an item-by-item explanation of what is included in an insurance policy, using a sample insurance policy as a reference. The first item is assured. The insured is the person who receives insurance benefits in the event of damage to the cargo. Generally, the importer is the insured. When the exporter is the policyholder of insurance under the terms of CIF or other insurance policies, it is believed that the exporter makes the insurance claim. However, since it is the importer who needs the insurance claims, in case something happens to the cargo, it is common for the policyholder, exporter, to assign the right to claim insurance to the insured, importer. Number 2, invoice number. A control number on the invoice that can be arbitrarily determined by each company. Number 3, insurance policy number. This is the number of the insurance policy set by the insurance company. Number 4, amount insured. The amount insured is generally defined as 10% above CIF price, which is the amount of resale profit and expenses that the importer would earn on the sale of the shipment. If the CIF price is $60,000, the amount insured is $66,000. The unit of currency for the amount of insurance is the same as the unit of currency on the shipping documents. Number 5, place of insurance payment. The location where insurance claims will be paid. Number 6, accident notification contact. This is the address to notify in the event of an accident. The insurance company's office or claims agent is set up, and it will be stated that the insurance claim will be paid by this notified party. Number 7, insurance conditions. The insurance conditions will state the extent to which the insurance will cover the risk. Number 8, transportation equipment. If the shipment involves transportation from the shipping point to the loading port, and you wish to insure the transportation in between, the means of transportation will be listed. For example, it will be described as track, rail, and so on. Number 9, destination of the port of loading. If the shipping point and the loading port are different, and you want to insure the transport in between, the shipping point will be listed. Number 10, name of vessel to be loaded. The name of the vessel on which loading is scheduled will be entered. Number 11, port of loading. The name of the port at which the vessel is scheduled to load. Number 12, date of departure. The year and month when the vessel is scheduled to leave the port for loading will be entered. Number 13, port of unloading. The port at which the vessel is scheduled to unload the insured cargo. Number 14, final destination and means of transportation. If the port of unloading and the final destination are different, the final destination and its means of transportation will be entered. Number 15, name of cargo, quantity, and so on. The name, quantity, packing style, cargo mark, cargo number, or others of the cargo are described in writing. When the bill of lading states, in container under and or on deck, it means that the cargo is handled in the same way as if it were loaded on board. Since the deck is more vulnerable to damage than the ship's interior, if the cargo is to be loaded on deck, it is necessary to ensure it is a special clause. Number 16, place of creation, date of creation, and number of copies issued. The value of the insurance policy, the date of creation, and the number of copies issued is listed. Number 17, italicized policy conditions. Italicized clauses are clauses which state that losses caused by war perils, strikes, riots, and disturbances are unsecured. Also, it states that the insurance company is exempt from the contents of these clauses. Number 18, excluded clauses. This section contains clauses for boarding and stranding, other insurance clauses, and loss notice clauses. Number 19, securities text. The text of the securities has been the same for more than 200 years. Naturally, the content is not adapted to modern trading, so extra clauses, italicized clauses and other extra clauses, the ICC on the reverse side of the security, and the association war risk clauses, and association strike, riot, and disturbance clauses are added to compensate for this. As I have explained, the terms and conditions of insurance and Incoterms are quite important factors in attaching insurance. Who is the policyholder and who is the insured, and who bears the risk and to what extent, is a case-by-case basis, so be sure to check them carefully. That's all for this issue. Thank you very much.
In this channel, I explain about international logistics knowledge for your better understanding. I hope this video will be a good support for your logistics job. If you have any shipment from Thailand or to Thailand, please feel free to contact me Iino-san anytime. Also, I'm very motivated to keep updating these videos. If you subscribe, press good or comment anything. Well, thank you. See you next time.